Hi everyone. Today, Don and I just wanted to give our hot take on the Amazon earnings that came out yesterday, and just wanted to go through some key learnings. So first of all, Don, as I looked at the earnings yesterday, there were a few things that jumped out at me. Number one, that Amazon's really getting cornered for profits, and so they've done a immediate impact, a positive impact to profits by increasing the cost of Prime membership. That to me, it's a powerful lever for getting profits up in the near term, but it's very dangerous. It's how much of it is going to really shut down Prime membership in terms of like not how many members are going to move away to say Walmart.com or other alternatives.
Right.
Because what's working for Amazon is their network effect in terms of Prime members get unique access on Prime Video and other things like that, but it's still going to have a negative effect on the long term. But that's one thing which we saw. Um, the big area which was really good from if I were the CEO of Amazon is that I'm starting to see some solid diversification for the
Yep.
first time in the history of Amazon, is where Amazon retail is less than 50% of its total revenue, which is crazy to think.
Amazon third-party sellers, Amazon 3P units we're up to 56% for the quarter, 56% of the total. When you think about that, that's the highest ever. And again, for a brand or for big brands, they tend to focus on all 1P, and that's obviously important. But the marketplace component of this is there's a huge 3P component that needs to be factored in as brands are looking at how they optimize their performance on a marketplace, whether it be Amazon or any other. So I thought that was one interesting point I wanted to mention
That
there.
is also very interesting. So the continuous rise of third-party seller marketplace, and of course, the perfect nirvana and the combination that Amazon's always been looking for is how do I get third-party marketplace sales going and do seller fulfilled Prime. That
Right.
is, Amazon doesn't even have to get into the fulfillment. Now it's just, I put the shopper and the seller in the same marketplace, and I'm just collecting toll for everybody who goes on top of the bridge called Amazon.com. So that's
Yep.
perfect nirvana for them. It's hard, but they've been working on it for the last 10 years. They continue to work on it. I think the interesting thing is always that the third-party marketplace is a huge long tail. You're looking at like hundreds of millions of sellers making
Right.
up that 56% of Amazon's revenue, and you have about 5 to 10,000 vendors making up the remaining 44%. So the love that the vendors do get is pretty solid, but at the same time, thinking about a hybrid strategy is
Right.
certainly worth it. Like maybe if you're launching a new assortment or launching a new product line, maybe it gets a good start instead of a cold start on Amazon retail. But coming back to the earnings, Don, I also thought that the supply chain shocks are being really seen by Amazon now. The labor costs went up, costs going up, and so profits coming down from that perspective.
Mm-hmm.
Wages are going up. Did you know that one in every 170 people in the US is employed by Amazon? It's crazy.
Wow.
And
I
so
didn't
like
know that.
with the great resignation that's happening, W-2s are going up, 1099s are going up, and that's having a huge impact on Amazon's labor costs. And not to mention the supply chain issues, whether it be shipping from China or even factory issues over here, it's all starting to have an impact on the cost structure, which again, either going back to the vendors or being passed on to the shoppers, whether through Prime increase in Prime membership, or whether it be price increases purely.
Yeah.
So it's kind
And
of very.
one point to mention there on supply chain and really more so, I was just thinking broader profit. One of the notes that I had captured down here was this was the first time that Amazon actually broke out how much their advertising business was worth, and it's 30, I think, right about $31 billion business today, which is about a third of the size of Facebook's revenue. And from the brand side, just switching for a moment, right? In Q3, I think that business was up north of 50. I think it was like 55% in Q3, year-over-year growth, and in Q4 it was closer to 33%. So you can really see there's a couple big pockets of profitability variables that can be moved around. And I think your point is spot on, Guru, of as you get these dynamics at play, you can start to see the Prime membership being a lever to pull to help offset some supply chain cost and labor cost. But again, that the advertising, I mean, a third of the side of Facebook is just staggering. But you know, it's important again for brands, I think, to step back and be able to see kind of the forest through the trees, if you will.
It's huge. I think the impact to profits from retail media is massive because it's a high 80% gross margin business.
Mm-hmm.
If you think about Amazon retail, it's like your gross margins are in the teens.
Right.
So having that revenue mix replaced by a high gross margin business means higher profits overall, higher EBITDA for Amazon, which is great news. And of course, they'll use that money to fund future growth. By the way, one thing which is concerning is some of that federal stimulus drying up and potentially a looming recession. There were some signs that we were able to see in terms of the outlook not being as strong as one what would expect coming out of a quarter like this. So for all of us to sort of think about how this is going to pan out, with especially in the wake of supply chain issues and the Great Resignation and now a looming recession this year, this is going to be a hard year for us.
Right.
Any other thoughts, Don, from an earnings perspective before we jump into some deeper topics?
No, there was one other point I thought was interesting. I read in the release that one of their priorities was from an advertising perspective to improve the usability for sellers and brands. What made me start thinking about this was, you know, are there better APIs for agencies? You know, Guru, obviously you run a company here, whether it's brands, but just to be able to allow the dollars being spent to be better optimized and automated. What I thought was interesting is they talked about some of their advertising principles. So we'll see how that plays out. But I think, you know, that business is only going to continue to grow. Whether it continues to grow at 60%, you know, I guess that we'll see. But to your point, higher gross margin, better automation, you know, just making it causing any less friction to continue to grow that business.